I'm good. Good evening, everybody. Can you hear me?
Yes, we can. Good evening.
Oh, I'm good. Okay. Let's talk about one of the aspects you are used to, which is the your FRDs, which is the cash flow statement. Where we are going, although at corporate reporting level, they've tested cash flow for simple cash flow, but the major focus is group cash flow. Don't forget, there is no way you will know group cash flow without knowing the simple. You don't know the simple cash flow, there is no way we can do group cash flow. As first of all, do the simple cash flow, then we'll now go to group cash flow. Okay. So you follow me in my explanation. So the cash flow can flow in two ways. It's either it is inflow or outflow. Cash flow can flow in two ways. It's either it is inflow or outflow. And if it is inflow, it's positive to an organization. If it is outflow, that means it's negative. Okay. Cash flow, so this with two things in line with ISM, inflow and outflow. So if you ask me to define cash flow, my definition must capture these two things, inflow and outflow. So if anybody asks me to calculate cash flow, define cash flow, I'll tell them that how the company generates cash, how they generate in form of inflow, and how they utilize the cash in form of outflow. If you now ask me further, what are the statements of cash flow? I will tell them it's a statement showing how cash is being generated and how it's being utilized. Now, don't forget, method of preparing cash flow, method of cash flow statements are indirect and direct. But either direct or indirect, don't forget at this level, no more direct at this level. What they can test is the indirect method. But either direct or indirect, there must be components of cash flow. One, we have operating activities. Two, we have investing activities. Three, financing activities. So let's pick the activities one after the other. What is operating activities? And the word operation. Operating from the word operation. According to Ias 7, is that operating is the key principal revenue generating activities of an entity. This is what is giving us where the money is coming from, what the company is doing and they are getting money from. It's known as operating activities. So they ask you, what are the items under operating? We have cash received from customer. If I don't receive from my customer, the business will collapse. Two, cash paid to suppliers. Three, cash paid to government. Cash paid to government in form of tax. That is another level. 4, cash paid to employees in form of salaries and wages, cash received for service center, cash paid for service center, commission received. They're all words operating activities. Investing activities, according to Ias 7, investing activities is the acquisition and disposal of non-current assets and investment. is the starting point of any cash flow is investing. But English is acquisition. What is acquisition is buy. What is disposal? Disposal is sell. Don't forget, what we always do in investing is buy and sell. Now, based on this definition, for example, let me ask you, class, in the non-current assets, they report PPE, and they also report PPE, and they also report intangible assets. If I ask you how many number of transactions will it be in investing activities? The number of transactions that will be in investing activities, who can tell us?
Four.
Hmm?
Four. Buy, sell, buy, sell.
It's four. It's four. So don't forget, non-current asset can also be subdivided into two. We have tangible and intangible. Don't forget, for intangible, what do we do? We depreciate. For intangible, we amortize. Now, if they now ask me what are the items under investing activities, I will say acquisition of non-current assets, disposal of non-current assets, acquisition of investments, disposal of investment, plus the linkages. What are those things that can link to investing activities? We have dividend received. So dividend received is an investing activities. We have interest received is what? Investing activities. And finance income and investment income. All these are what? Linkages. We can trace it to investing activities. So that is about investing. Let's go to financing. Financing activities is very simple. What is financing? How an organization finances activities? But yes, the 7 give us definition. So is the changing in the size and composition of equities and borrowing. Just simply put it, how a company finances activities. Now, don't forget that It's only three ways company can mainly finance its activities. One is the share capital, share issue. They issue shares to the public and they collect cash. Just as we see that banks are raising money through public offer. Two, other way, they issue its share premium above the nominal value. Then they can also borrowing. Which borrowing are we talking from? Not current liability. The borrowing that take longer years to utilize. Not in the current liability, which is bank overdrafts. Then we have linkages where we can link to dividend pay. They are linkages. Dividend pay, who do we pay dividend to? Dividend pay is paid to shareholders that trust us with their money to invest in our. 5, interest payable, which is the finance cost. Then 6 is the lease payment. These are the 6 items under financing. So if they ask me anytime, what are financing activities? This is what I will use English to modify. I cannot say share capital, share premium, borrowing, no. But I will use English to modify all these 6 items. 1, I can say redemption of borrowing, dividend paid to shareholder. I can say, okay, interest paid on loan, issue of loan, interest paid on these assets. I just be using English to coin all those 6 items. Now, before we go further, for me to prepare cash flow, which information do I need to prepare cash flow? Anybody want to test my knowledge about statement of cash flow? Which information do I need? Information needed to prepare cash flow. Cash flow statements. 1, you must provide me 1 current year P or L. If you want me to prepare cash flow of 2024, you must give me P or L, statement of profit or loss of 2024. If you give me 2024 and 2023, I don't need 2023. I only need 2024 current year P or L. 2, we need statement of financial position of 2 years. If you want me to prepare cash flow of 2024, you must also give me 2023. That is it. You also give me 2023. The third one, I need additional information. Third one, I need additional information. Third one. In additional information, what do I need? Additional information. Which information am I expecting in additional information? Now, first one is information on non-cash items. On non-cash items, I need information regarding non-cash items. Non-cash items. Yes. One, you must supply me non-cash. What are the non-cash items? We have depreciation, amortization of goodwill, either it has impaired or this goodwill can be either impaired or it has been written off. So if I need information regarding these three, I will see them in additional information. Two, information on disposal. I need information on disposal. Information on disposal, what can they sell? They can say, if I need information, it's waiting for me additional information, any information on disposal. What can they sell? They can sell PPE. They can sell investments. They can sell subsidiary. And they can sell intangible. How is it? Now, which information am I expecting additional information again? Which information am I expecting additional information? I'm expecting information on dividend pay. Which is might. They might decide not to give me, I'll calculate. Then, information regarding the following: dividend received, investment income, interest received, if I need information regarding all those ones, if they are not interest received, investment income, finance income, if they are not part of the P or L, if what this is not seen in P or L as a line item, is waiting for me in additional information. Those are the background of, before we now start solving question, let's differentiate between these concepts. One, dividend received and dividend paid. Dividend received, dividend paid. Interest received and interest paid. Please, which activities is dividend received?
Investing.
Investing.
Investing. Investing activities. Dividend paid.
Financing activity.
Financing activity.
Interest received.
Investing.
Investing.
Interest paid.
Financing.
Financing activity.
Interest paid can be financing / operating. There's argument over some treatment of certain item in our classification of our certain item, such as interest paid. Interest paid could be financed. Some people argue that interest paid is financing. Some say no, it's operating. Those that say it's financing, the argument they put forward, it has a loan, is a typical financing, borrowing. That interest paid on our borrowing should go to financing. Some say no. Say, why do I borrow? It's because of the operating. That operating should take care of, my operation should take care of that kind of interest. They approach Ias 7 to resolve the issue. Ias 7 look at it and said anywhere you put it is good for them. What we have done is the background to cash flow. Before we go further, on the cash flow, let's test our understanding. Can you see my screen?
Yes, sir.
You will tell me which activities, whether it is inflow or outflow. First of all, tell me you chat it or you say it out. We want to show whether what we have been saying this morning you understand before we proceed to question. You will tell us which activities first and whether they are inflow or outflow. Cash or cash equivalent, let's do that. Cash received from customer, which activities?
operating activity, and
Operating
is an inflow.
activity.
Operating activities inflow. You know what we do? Especially we type it. Just say operating OA. If it is financing, FA, then inflow outflow, put it at front. So I want to know that we are on the same page. Cash paid to suppliers. Cash paid to suppliers and employees. Which activities? Mr. Jide Akinpelu is only one I say operating activities, but he did not put whether it is inflow or outflow. Correct, sir. Cash paid to suppliers and employees are operating and it's an outflow. Thank you. Mr. Jide, I'm impressed. Cash generated from operating activities don't also do I assess so. Cash generated from operating interest paid. Yes. Which interest paid is which activities? Interest paid is which activities? Financing. You do not say whether it is outflow? Yes. Deborah, yes. Thank you, my sister. Financial outflow. You are just saying only outflow. You will tell us which activities before and then say sign up. If you see outflow, you let us know. Don't forget we said interest pay can either be financing or operating. I just want to show whether you know it. Maybe you have known this one. I used to pray when I was writing the exam that I should bring any of the cash flow, either simple or group cash flow. It's very simple. Dividend received. Dividend received. Let's do dividends. Investing in flow. Thank you, Mr. Jacob. Yes, investing in flow. Investing in flow. Thank you, Elvis. You can see is investing in flow. Good. Proceed from sales of property, plant, and equipment. Which activities is that? Proceed from sales of property, plant, and equipment. Yes, investing in flow. Because I said investing is acquisition and disposal of non-current assets and investments. Okay, I think you are okay. Before we move further, let's thank you, class. Thank you. I really appreciate. Thank you. Yes. Inflation inflow. Let's look through it. Is there any activities you think is confusing so that we can talk about it? Then move to practical situation. Move to question. Is there any activity you think want to throw more light? I think it's a little bit confusing. Is there anyone here? You can just point out. Let's talk about it. Because we don't have time. Mhm. Well, so the way you have identified everything is the way when they give you question, also identify it. Okay, somebody's asked question. Let's see. Is it question you're asking? Repurchase of own shares. That is the treasury shares. Don't forget which activity is that? Is what? Financing activities. And it's an outflow. It's an outflow. The way you have identified them is the same way here. The same way we are able to identify them is the same thing. Look at Dixon. If they ask me now, how many transactions will it be in investing? Number of transactions is 4. Because anything reported under non-current assets is investing activities. Anything they reported here. PPE, we can buy and sell. Development expenditure, we can buy and sell. In the same way, if I ask you now, how many non-cash items do I need in this question? It is just 2. Depreciation and amortization. Where am I going to see them? It's in additional information waiting for me. Me, I will not give you a template to follow. I'll give you the template to follow. Either group cash flow or simple cash flow is the same template. Dixon, I've sent this question on Dixon to you. Let's start with Dixon. I'll say statements of cash flow for the year ended At the first match, operating activities, profit before tax, what is the profit before tax? Give me profit before tax. What is the profit before tax in the question?
342.
I hope you have the question with you.
Yes, sir.
Okay, good. So I'll pick profit before tax. I'll now go to adjustment. What are the adjustments to do? If you go to 2019 per vendor, either May or November, they set question number one group account. They still go further again to set statement of cash flow, 15 marks, in one of the 15 mark questions. So don't think they cannot set simple cash flow. They've done that before. So I'll pick 342. I'll now say adjustments. Go to the template. What are the templates you are going to follow? I'll say template for operating. Templates for operating activities. 1, add back non-cash items. I will add back non-cash items. What are the non-cash items? Don't forget depreciation, amortization, goodwill, either it has impaired or it is written off. But what will tell me the one I need? No current asset. The non current asset will tell me where am I going to see all this? It's waiting for me in AI. Additional information. So I'll go to the non-current asset. The non-current asset, they report PPE and development expenditure. For PPE, I will depreciate. For development, I will amortize. Where am I going to see them? It's waiting for me in additional information. Where I go to additional information, give me the figure. Give me the figure in additional information.
Amortization, 60,000.
Amortization, 60,000. For the year. 60. Next, I need depreciation.
57,000.
That's all. Second thing on the template. This is one. Information on disposal. What can they dispose? Don't forget they can dispose PPE. They can dispose subsidiary. They can dispose investments and intangible. Where am I going to see information on disposal? They are waiting for me in additional information. My own is to determine the selling price and get the carrying amount. Then I will know whether they make profit or loss. Either it is profit / loss. So what do I do if it is profit? If it is profit equals to less, and if it is loss, I will add. That's all. That is all. Somebody should read the information on disposal to us, please. Somebody should read the information on disposal to us.
During 20x8, item of property, plant, and equipment with a carrying amount of 103,000 were sold for 110,000. Profit on sale was netted off against other expenses. Depreciation charge in the year on property, plant, and equipment totaled 57,000.
No, it's okay, it's okay. We only need information on disposal. What is the selling price? 110.
110,
Carry amount.
103.
He made a profit. Don't forget, if it is profit, we less. If it is loss, we add. Profit on disposal of PPE. The next thing on the template, wrong classification. How do I know wrong classification? I have picked profit before tax. Opposite of the question. Look at it. I have picked profit before tax. 342. All those items that precede profit before tax. All those items that precede profit before tax. Either they've added or subtract that does not belong to operating, that belongs to any other activities apart from operating. I will do the opposite of the question. I'll first of all identify it, then I'll do the opposite. Look at it. In this question, we have finance costs. You agree with me? Let's start from the beginning. Revenue is revenues and operating activities. Cost of sales and operating activities. Other expenses, operating activities. Finance costs, you are not operating. You are finance. I will now do the opposite. I'll say finance costs. If they add, I will subtract. If they subtract, I will add. Finance costs, I will add back. That's it. Some question ask more than one. Let me show you some question. They ask more than one. If you go to decline, look at decline question. Go to decline. Decline asks, Look at decline question. If you go to the pure head, we'll pick profit before tax, 109. Finance cost is removed before 109 and it's not operating. I will do the opposite. Finance income is an investing activity they've added in operating. I will less. That's why we said opposite of the question. Opposite of the question. Just go to the template. It's opposite of the question. Opposite of the question. Now, it means if it is expenses, I will add back the expenses. If it is expenses, I will do what? Add back. So far I've identified as a wrong classification, I will add back. Then it means if it is incomes that is not operating, wrongly classified, I will do what? I will less. That is it. So anytime you first ask yourself, is these activities operating? I will do the opposite. If it is income, I will less because they will have added. If it is expenses, they will have added. They will have less, I will add. Just like the one we are doing now, finance costs. They've removed the finance cost of 15. It's an expenses, I will not add back. It does not belong to operating. It belongs to finance. They've removed it from operating and we add it back. No, it belongs to finance. Next, I'll go to change in working capital. Change in working capital. Don't forget, what are my working capital? We have current assets and current liability. So in the template, you have to follow for the purpose of exam, either group cash flow or simple cash flow. Also for change in working capital. Don't forget, what are the working capital? We have current assets, then we have current liability. These are my working capital. What are the rules of working capital? Any increase in current assets, increase in current assets, yeah. Any increase in current assets will lead to cash outflow. Why decrease in current assets will lead to what? Cash inflow. If it is liability, increase in liability is an inflow. While decrease in liability we are paying is what? Outflow. This is what we learn in changing in working capital. Don't forget, increase in current assets is a cash outflow, while decrease in current assets is a cash inflow. Then, increase in liability is a cash inflow, while decrease in liability is a cash outflow. Let's take them one after the other. Inventory. I'll go to the current assets. Inventory. Inventory. Inventory at the beginning, I'll go and check what is the inventory. Inventory at the beginning is 227, at the end is 360. So I'll say 360 minus 227. Oh, at the beginning is 227, at the end is 360. Don't forget, the bigger one will come first. Yeah. So increase in current assets will lead to what? Cash outflow. Outflow of how much? 360 minus 227.
133.
133 outflow. Then I'll go to trade receivable. What is the trade receivable at the beginning? Trade receivable at the beginning is 324. At the end is 274. So the bigger will come first, 324 minus 274. So it has decreased. Decrease in current assets. It's a cash inflow. Those who owe us money, they've come to pay. Part of them has come to play. How much is it now? How much is the inflow?
50.
50. Then I'll go to next. Investment. Investment in the current assets and cash equivalents unless the question says otherwise. Even though the question is silent, I will assume they are cash equivalents in line with IAS 7. They can easily be converted into cash. That is what I will assume. Cash equivalent. I'll go to the current liability. We have trade payable. Trade payable. For the trade payable. Trade payable at the beginning is 352. At the end is 274. 352 minus 274. Don't forget, decrease in liability is a cash outflow. Outflow of how much now?
78.
78. I will now sum everything. I will sum everything. What does it give us? I will sum everything. Then I'll calculate my price. I'll sum everything. What does it give us?
$306.
That's 306. Cash generated. The last item is the task calculation. Why? I'll go to the question to see how different tasks. I'll go to the question. Does he have different tasks? Yes, it does. In the non-current liability, what is the different task at the beginning? Is 45 plus. I'll go to the current liability to go and see the income tax at the beginning. The current tax at the beginning is 153. 45 plus 153. What does it give us? 198. I will take tax in the P or L. I will add to it. What is the tax in the P or L? 162. 198 plus 162. This will give me 0. 16,360. At the end, what is the deferred tax at the end? I'll go to the question and check. Deferred tax at the end.
$48.
48 plus current tax at the end, which is 56. 48 plus 56,
104.
so I'll put 104. How much is the tax paid now? 360 minus 104 to be derived.
256.
That's it. Is there any issue, or should we need to take it once more? Or you are open? Any issue? Do we need to take it one more? So tax paid now is 256. This will now give me net cash flow from operating activities, which is how much? How much is that? 306 minus 256. I think that will give us 50. I'll go to investing activities. Don't forget, investing is acquisition and disposal of non-current assets and investments. Investing activities is acquisition and disposal of non-current assets and investments. Buy and sell, but majority of the question, we don't calculate sell. Sell is waiting for me in additional information. We don't calculate that. The major calculation we do in investing is, does it buy an asset? That's the only thing we do. So in this one, I'll bring the cash proceeds from sales of PPE, 110. 110. 110. So I'll go again. Do they buy PPE? That is really calculation we do in investing. I can do that. I'll now go to the question. What is the PPE at the beginning? I'll go and check. Go to the question, what is the PPE at the beginning? You can give us figure. What is the PPE at the beginning of the question? 737. You go to the question, you have 737. Depreciation of 57 was charged. It will reduce my assets. Yes, they disposal at net book value. What is the net book value of the asset disposed? 103. Do they revalue? I will check. three places for evaluation. Does it evaluate? It's either give me additional information or it give me statement of financial position, equity. At the beginning was 60, at the end is 160. The revalue. If you still go to the OCI, other comprehensive income, daily value, yes. So there's a revaluation surplus. If it is deficit, I will less. If it is surplus, I will add of 100. Then they acquire set on lease finance. This one will be seeing additional information. And go to the additional information. They make it clear that assets acquired on lease. Let me read that part out. They say the result charge in the year property plant equipment total 7,000. This thing purchased 56,000 of property plant and equipment by means of finance lease, because I've been seeing lease obligation in the financial statement. So the asset will increase 56 as well. If it is group cash flow, you will now add PPE of the subsidiary acquire and dispose. It's the same thing. You see, when we get to group cash flow, you will see almost the same thing. Don't forget, group cash flow has been tested twice at professional level, one in May 2016 and in 2019. Since then, cash flow has not come. Then, in 2019, they now said simple cash flow 15 mark. So you can go to your finder to check what I'm saying. I will now sum everything to compare it. What is the PPE at the end? Go to the question, what is our PPE at the end? PPE 925. So 925. So who can help us with this figure, please? Who can help us with that figure?
733.
733. Thank you. Now say 733. Additional. 925 minus 733.
192.
92.
That is it. 192. Purchase. So purchase of PPE. I've done 192. I am true with PPE, buy and sell, investing in acquisition and disposal of non-current asset and investment. I'm true with that. What did they report again in non-current asset? Development expenditure. There is no information on disposal of development expenditure. So next, development expenditure. Next, do they buy development expenditure? There's no information on disposal. We don't calculate disposal. It's waiting for you. Go and pick it. But okay. Don't forget, what can they dispose? When we get to group cash flow, we have done disposal of subsidiary, how to calculate gain or loss. But we have not done full question on disposal. You will see those questions. Very simple. Then from next week, especially on this cash flow, because we are struggling, suggesting can be tested as indication. SBR format of it. I'll send 2 questions to the platform. You will see it. After the group cash flow, we quick run through one quickly. Then you go and learn the second one, so that in case they come in that form, it's not something hard. It's not hard. You'll just be testing your knowledge. You will not prepare. You'll just say, give us these activities, give us these activities. It's not something hard at all. So far, you know this cash flow, you know that one. Just present. So development expenditure. At the beginning of our development expenditure,
160.
160 at the beginning. We amortize. Don't forget there's amortization of 60. So 100. What did they report at the end? At the end,
290.
so 90. So additional 190. So as of the maximum for transaction is only 3 that occur. Development expenditure. Purchase 190. That's all. That is all. I'll just go to the question. Sum it. How is it all? Because it's buy and sell. They report intangible development expenditure and PPE. PPE buy and sell, they buy, they sell. Development expenditure, they only do what? They only buy, they do not sell. I will now sum it up. This is what? Net cash flow from investing activities. Who can give us the figure? Who can give us the figure? Who can give us the figure?
Minus 272.
I will now put 72. Financing. Don't forget your financing share capital. Or go to the question share. Financing activities, 6 items. What is the share capital at the beginning? There is a bonus issue here. If you read one of the additional information, so there is a bonus issue here. During the year, Dixie made a 1-for-8 bonus issue, capitalizing return followed by right issue. 1-for-8. Don't forget, bonus issue will be given to who? Existing shareholder. Based on what the knowledge of any per share we have done. So I'll go to the share capital. What is share capital at the beginning? 400. But there's one error there. They say they capitalize retain any, which is wrong. Or just okay, share capital at the beginning. What is the share capital at the beginning? I'll go and check. It's 400. Nominal value of 1 naira does not make any sense to convert. Bonus issue now. 1/8 times 400. That will give us 50. They say this 50, they capitalize retain. So if I want to do my dividend pay, I will remove the 50. So this will give me 450. And at the end, what they report? 500. $500 minus profit. That's all. They issue it at a premium? Yes. Share premium. Share premium at the beginning, 100. At the end is 250. 350. 350 minus 100. 100. 250. Let's look at the loan. 6% debenture loan. 6% debenture. At the beginning, 100. Increase in liability cash inflow. 150 minus 100. Inflow of 50. So out of the 6 in financing, I have done 3. Out of the 6 financing, I've done 3. I'll go again. Dividend pay. I'll go and test. They did not give me dividend pay. I'll use the formula. Dividend pay. Retain any at the beginning. $255. Bonus issue. They capitalize here of 50. So this is original return 205. I'll now add profit for the year. Profit for the year 180. 385. I will now less the retain earning at the end. No more space. Let's go and do it all. I will now less retain earning at the end. Eight five at the end. I will now less retain at the end. What is the return at the end?
229.
229. So if I remove 229, what does it give us? 385 minus 229.
156.
So dividend pay 156. That's all. These payments. Let me do the lease obligation. Lease payments. At the beginning, we have one in non-current liability, and the other one is in the current liability. At the beginning, I'll pick 6%, 80 plus 12. 92.
Yeah,
I'll go to
go straight. This is straight. They go like that.
Just leave me. Oh. Yeah, where I drive out.
Elvis, please
add
mute.
the 12. We're going to pick the task in the visual task. Okay. Sorry. Finance list in additional information. The 56 they acquire least during the year. Please. Finance list during the year. 56, 8, 148. At the end, this payment at the end. I will see one in the current and the other one is not current. Hundred plus 17. How much is the lease rental now? This
31.
payment. So the lease payments, or lease payments, it's an outflow. How much is the lease payments? We calculate at 1. Then finance costs. Hmm? No. No. Needs to be adjusted. Because the question says eventual interest. No, the eventual interest by issue of SAP 2007 Finance cost includes the venture interest and finance lease charge. So for the venture interest at the beginning, nil. Add P or L, what they put at the end. Finance cost at the end, the venture interest, five, eight, 10. That's all. I will now add everything for financing. Net cash flow from finance. What does it give us?
I don't understand your last said forward the finance cost.
I'm with you.
This 10, negative 10. Is it finance cost or is it
Okay.
payment?
Finance cost.
Finance cost.
The question says the venture interest were issued in the year. Finance cost is included in the venture interest. So I will now adjust for it. So I will add all the nets. What is the net cash flow from financing activities?
153. 153.
Outflow or inflow? One five three is it negative or positive?
Positive.
I will now add all the nets. Net of operating. I will add all the nets. Net of operating, net of investing, and net of financing. What does it give us?
Negative 69.
If it is negative, I'll say decrease. Cash and cash equivalent. So decrease. So go and do my cash and cash equivalent at the beginning and the end. decrease in cash. Let's do our cash and cash equivalents. So cash and cash equivalents 2007, 2008. Do we have cash in 2007? Let me check. Cash in 2007.
One seven.
In 2008.
No, 117. 117.
In 2008.
29.
Part-time investments. Investment in 2007.
46.
In 2008 income.
143.
Bank overdrafts. Bank overdraft 2007.
54.
In 2008.
132.
What does it give me?
That's not 8. 40. That's not 7. 109.
If I put 109 here, will it give me 40? Cash and cash equivalent. That's all. Any issue? Any issue? Let's quickly take another question on this. Set your platform. Yeah, let's go to months. I think I sent it to the platform. Months. Have you seen the question? Have you seen the question? I'm trying to look for the question. As I know I've sent it to the platform. So let's go to the question months. Have you seen it?
Yes, sir.
So if you have seen it, good. I'm still looking for it to send to you if you have seen it. What is the profit before tax? Month. The assignment on DSTV and UEFA, nobody did it. Let me send the solution. Yeah. What is the profit before tax in the question? In months.
3,000.
3,000. Thank you. We use this knowledge of this one. There's a revaluation surplus that leads to deferred tax. That's why I want us to do this. The month. Two months. Yeah. Statement of cash flow for the year that which year ended. Let's see. 31st March 2013. Operating activities. What is the profit before tax? 3,000. Adjustments. What did they report in the non-current asset? I'll go and check. They report PPE and deferred development expenditure. So for PPE, we depreciate, and deferred development expenditure we amortize. Where am I going to get figure relating to this? You have note 1. Depreciation of property, plant, and equipment was 900. Depreciation. Then amortization is 200 based on the question. I'll go to the next template. What is the next template? Information on disposal. The next template, information on disposal. Did they dispose? Question, I'll look to the additional information. If there's no disposal,
No
good for
disposal.
no disposal. Next, I will go to wrong classification. There's no disposal. I'll go to wrong classification. Finance cost, loan interest, and lease interest. I'll put the wrong classification on loan interest. How much is the figure for the loan interest? 1.5.
150.
The support I will add. The next lease interest,
250.
the support I will add. Next, change in working capital, change in working capital. Inventory, what is the inventory at the beginning? We'll go and check. 38. At the end is 33. Inflow 38 minus 33. Inflow of 500, decrease in liability. It's a decrease in current assets is a cash inflow. 38 at the beginning, 33 at the trade receivable. Trade receivable at the beginning, 2,000.
2,200.
At the end is 295. So 295 minus 2,200. It's an increase in current assets. Give us how much?
750. 750.
So is it inflow or outflow? Is it inflow or outflow? Is it inflow or outflow? What are we going to do? We said increase in current assets. If current assets increase, it's a what? Cash outflow. I did not hear Mr. Robert this line, so all is well. 750 outflow. Increase in current assets. Those who are winners has increased by 750 compared to last year of 220,200. Then trade payables. Trade payable at the beginning, 2,1. At the end is 2,650. Increase in liability, cash inflow. So 2,650 minus 2,1. Increase in liability, cash inflow. How much is that? 2,650 minus 2,1. What does it give us?
Inflow of 550.
Inflow of how much?
550.
Good. That's all. That's all. I'll sum it up. And let's see whether you can help us with the summation. Best one is we go.
$4,800.
4,000.
800.
I'll just bring 4,800. Look, the reason why I say we should calculate this question, we'll have choose legend. It's okay. Cash generated from operation 4,800. Then tax. Does he have different tax? I'm going to check. Does he have different tax? At the beginning. Let's check what is the different tax at the beginning. Yes. At the beginning is 8.
15.
That's
Sorry,
at the end.
800. 800, sorry.
800 plus Current tax at the beginning is 725. 800 plus 725.
1,525.
1,525. Thank you, my sister. Is that Ami?
Sir?
Oh, is that me?
Debbie.
Debbie, okay. Thank you.
Yes, sir.
That's in the POL. Debbie, you are not giving me my wine. That's in the POL, I'll pick. Then there is a transfer of deferred tax. There's a revaluation surplus. If you look at legend, they give us the tax rate. This one, they give us the deferred tax direct. So I will add, look at it. They said, on 1st July 2012, monthly acquire additional plant lease under finance lease of 1.5. On this day, there is a revaluation of property by 2 million and transferred 650 as a result of this revaluation reserve to this great deferred tax. So revaluation surplus can create a deferred tax, we all know, because it will make it different from the tax base. So the deferred tax they transfer now, I will now say tax deferred tax on revaluation 650. If they don't do that, they will give me the tax rate. Like legend, he give us the tax rate. I will now multiply it for legend. He will give me tax rate. I will now multiply it by the surplus to get the deferred tax. So when I add it together, what does it give us? One five two five plus 1,000, that will give us 2,005 plus 650, please.
3,175.
3,175. Thank you, my sister. At the end, what did they report? What is the deferred tax at the end? We'll check. 15 plus 1250. I will add the two together. What does it give us?
2,750.
How much is the tax paid now? I will now say 3,175 balance.
425.
Hmm?
425.
425. This will not give me net cash flow. What is it?
4,375.
I will now go to investing activities. Investing activities. Does it sell PPE? No. Does he buy PPE? Let me go and test.
Yes.
How do you know yes? Okay, what
He
is it?
acquired additional plant on finance list now.
That is the least asset. Does not pay cash.
Oh, okay.
Just like the one we did. Go to PPE at the beginning. PPE at the beginning is what?
$10,700.
Depreciation.
900.
Disposal.
Not
Attainable
disposal.
value. But there's nothing they sold. Is there a revaluation surplus? I'll go and check. Those three places I told you. OCI, statement of financial position, equity side, and additional information to tell us. Hmm?
Mm,
They acquired through lease. So I'll bring that one down first. Lease finance. It does not pay money, but the PPE will increase. How much is the lease?
1.5. 1,500.
1.5. Yes. Revaluation surplus of 2 million.
For the lease.
I will not remove the tax from here. Is the total surplus I will use. 2 million. That is the end. I will now submit. They did not dispose. What does it give us?
13.3.
13.3. At the end, what did they report?
14,000.
So additional.
700.
Purchase of PPE. Development expenditure. Let's go and do what are the purchase. What is development expenditure at the beginning?
Nothing. New. Amortization.
There's amortization.
Yes. Abi? Yes. 200.
Amortization. At the end, what do they report?
1,000. I sold.
How much is addition? How much is addition? 1,002. Net cash flow from any issue. Any issue.
Size 19. Oh.
I will go to financing. Share capital. What is the share capital at the beginning?
8,000. At the end, 8,000.
No movement in share capital. Therefore, no share premium.
Yes. Yeah.
No current liability. Next, all the 6 items under financing. There's no two. Please, let's do the list. Let's do the list. At the beginning, less than 1 year. At the beginning, I'll go and pick its obligation. $600 plus $900. 15. Finance list. Finance list during the year.
15.
15. 15. No disposal. At the end. At the end.
750. 750 plus 1, 2.
750 plus 1. How much, please?
1050.
So, dividend pay. Next. This payment is finance cost. They pay dividend. Oh, yeah, let's look. I'll go apply the formula. What is the retained earning at the beginning?
1750 plus the profit for the year.
Retained earning at the beginning.
1750.
Our profit for the year.
2000. Minus 10.
Then what is retained earning at the end? I will now less
32.
So dividend pay, financing,
550.
one five.
No, 550. 550.
Five five zero. Non-current liability loan. Does he have loan in the non-current liability? Let's check.
Yes, 8% loan note.
8% loan notes. At the beginning is what?
3125.
At the end,
14.
decrease in liability. Cash outflow.
1725.
Is it inflow or outflow?
It's an outflow.
Okay. 1725. No share capital out of the 6 we are giving for. no share premium. I will sum them together. Net cash flow from what's it give us? Need to go. So when you add it, what does it give us?
3725.
3725. 3725. Outflow. I will now add all the nets. 4375 minus 19 minus 375.
Negative 1250.
Negative 1250. Negative.
Yes. 1250.
This will now give me decrease in cash. So I'll go and do my cash equivalent at the beginning, at the end. What is the cash equivalent at the beginning?
Beginning 13 bank. Then at the end 50.
So if I put 13 here, will it give me 50? Cash equivalent at the beginning. That is it. So cash and cash at the beginning. How much is at the beginning? 13. So 1250 cash and cash. That is it. Any question? I'll set your platform, go and check. You can try Legend. God grace you on Sunday. As you are supposed to have leisure on Sunday.